I want to talk about why trading Forex beats being a farmer. So let's get into that right now. Hi Forex traders, it's Andrew Mitchem here. Today is Friday the 12th of June, and in today's video and podcast I want to explain to you the differences between what I used to do, which was as being a dairy farmer, and what I've done for the last 12 years, which has been a Forex trader, a currency trader. And I want to explain why, in my opinion, what I currently do now far outweighs being a dairy farmer. So let's talk about that, because I've got fairly good experience about both. Now, I was born on a dairy farm. I've been educated in agriculture. I moved to New Zealand 19 years ago to continue farming. I've owned a farm, I've sold a farm, so I've got a fairly good understanding of farming. But the problem is with farming, and dairy farming in particular, is that so many aspects of it are outside of your control. You don't have any control over the weather. You know, the climate. You don't have control over disease. You don't have control over a lot of your costs, such as fuels and fertilizers and feed costs. You don't have control over legislation in terms of, you know, sort of safety requirements and food hygiene requirements that come in. Everything that adds to your cost and really does affect your business in so many ways. And you have very little control over all of those things. Yet you have a massive amount of assets tied up, capital tied up within animals or within a farm. And a lot of people seem to think, for some reason, that you don't have much control over what you're doing when you're a Forex trader. But actually, I believe that that's incorrect. And I believe you actually have a lot of control over what you're doing as a trader. And let me explain why. You see, when you're trading Forex, you have control over what you trade, which currency pair you trade, when you trade, what time frames you trade, which direction you trade. You can be a technical trader, a fundamental trader, a combination of both. You can control your risk that you take on a trade. You can close part trades, you can move stop losses, you can close all of a trade, you can do whatever you like, really. Of course, you can't control the actual movements within the market, but that's where education and knowledge comes in, and understanding price patterns and what's happened previously in terms of support and resistance and how that's likely to affect your trades going forward. But when it actually comes to being able to manage your trades and place your trades, you actually have a huge amount of control, far more than you probably do within farming, when the major parts that affect your business are completely out of your control. And also, don't forget, the actual barriers to entry, the cost of being a dairy farmer are enormous and involve huge amounts of debts for most people, whereas the cost of entry into trading, a computer and internet connection, if you want to go well with your trading, likely some form of education, and then, you know, once you're ready to go from demo to live, some form of assets in terms of account to trade on. But really, that's quite low when you consider those the barriers to entry for trading as opposed to farming. So I hope that explains. You know, I've seen both sides of the equation. I've seen the physical aspect of being a farmer, and I've seen the online version and what I've done for the last 12 years of being a trader. So to me, there's two very different aspects there, but I'm more than comfortable and happy with the option that I'm currently doing, because to me it far outweighs any sort of farming benefits. So that's the actual theme of the video and podcast. I also wanted to share with you, I've got an email here, this was sent to me yesterday from a client, Chris, who took a trade on the British pound Australian dollar 4-hour chart. It was a trade, he said, that he took before unemployment figures were announced out of Australia. So he took it for a technical reason, and he had a trade on that hit 150 pip profit for a 34 pip stop loss, gave him a 4.4 to 1 reward to risk. And he said the take profit was hit within 40 minutes of actually placing the trade. So with 0.5% risk on that, that was a 2.2% account gain in 40 minutes on a technical trade that had the fundamentals following through, but the technicals were already telling Chris what to do in advance of the news coming out. And secondly, fantastic news on a live webinar I held for my clients last night. Gustav, a client of mine who's doing extremely well, took 2 trades on the 5-minute charts. So we've gone from Chris here with a 4-hour charts down to Gustav with a 5-minute chart. So it just shows that the strategy works on all time frames. But Gustav took 2 trades while I was on the webinar live and made 4% gain on his account just on those 2 trades. And it happened while we were live on the webinar. We were looking at the trades. He said, look, I'll put the trade on now. Here's my stop. Here's my profit. I've closed part of this trade and the other one's hit profit. Brilliant trading. Just identified 2 nice pullbacks on the Euro British Pound on the 5-minute chart. I was actually on the same pair in the same direction on the 1-hour time frame that I took live on the webinar. Gustav went down to 5-minute charts and took 2 trades. 4% gain in a matter of minutes. So, and just shows what can be done. So I hope you've enjoyed the video and podcast. If you have any questions you'd like me to answer in the future videos and podcasts, any subjects about trading, how I can help you, just send me an email, andrew@theforextradingcoach.com. Look forward to talking to you this time next week. Have a fantastic weekend and a great trading week next week. Bye for now.